Hello, everybody. Welcome to the Plus3 Futures and Commodities Show. We are recording here on Friday, January 10th, just after the close, 4:15 Eastern. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. And on today's show, we're going to cover the market action from the first full week of 2025. And it was not a boring week. There's a lot going on, both visible and, shall we say, below the surface. And Barry and I are going to spend some time and dive into that and talk about that. The most important thing you'll get out of the show, as with every week, is we're going to identify the major markets important levels to watch, where probabilities shift. And that's the basis of our work, and that's what we're going to do. How are you doing, Barry? How's 2025 treating you so far?
Well, it's
The
it's
volatility is awesome.
volatility is awesome. I just think there are way too many days off in between. I'd like to have
Yeah.
one full week or a couple
It's
of full
hard. It's
weeks.
hard to get in a rhythm, isn't it? When you take a
Yeah,
half a day here, a day there, and
absolutely. Ever
yeah.
since Christmas has been a little bit off, and when you get used to the certain cycle. So
And every for all the followers and all the subscribers, next week we'll start up on the midweek show. We're done with
yeah,
the holiday disruption, so
yeah.
let's dive in, Barry. We got the S&P there, the cash, and it sort of looks like it's rolling over, doesn't it?
Yep. Well, I mean, yeah, couldn't call it anything else, but it
Yeah.
definitely looks like it. And we'll review this from a couple of different angles and looking at and through also a couple of different indices just to make sure that we have our footing right.
Yeah. And if you're
And
new to the
I'll
show,
mhm,
definitely go back and check previous episodes because you'll see how, we're sort of moving into the next phase of our approach because as we approached, as we came into, October, November, December, we were getting cycles, we were getting time counts,
mhm,
and we were saying, hey, we got to watch for if the technicals support this, you got to pay attention because it could signify a major top. And now sort of the next pieces of evidence are falling into place.
exactly. And we're mostly evidence based. So
Hmm. Yeah.
so we want all the parts to be in place, all the ducks in a row before we call things out. And along those lines, so we're looking at the cash here. Last week I left off, well, a week before, we've been working this range between 58, 48, and 60, 20. And last week we talked about how just the room that we have between 58, 48, and 60, 20 is pretty big, large, and I don't really have anything in between them on the daily chart, and how we can have that volatility. We can definitely consolidate in here before something happens in either direction. We left off with talking about this 58, 48 level being important, meaning, if we break that, then the next real support is around 57.50, which just happens to be 270 degrees up from the October lows of 2023. And speaking of which, if you look at this, we have, we're very close to a square here, up about, what is it? 810 in
Hmm.
time
Hmm.
and 315 in price. We were right there. 315 in price basically capped the high as we went in. It wasn't a thrilling high, we kind of really a lot of grinding going on around the top, and then we rolled over, and then
More of like a whimper.
yeah, yeah, which is, not necessarily normal. Normally we want some kind of a big blowout, kind of a,
Hmm.
fantastic ending. But we didn't quite get that. We did kind of get that kind of a move up into what could be like a high prior to that in October, right? Or
Sure.
November.
You wanted more of like a Nvidia high, like today.
Exactly.
Like this week, not today, but like go check your
That false
Nvidia
break.
charts and maybe
Hmm.
we'll focus on that on the midweek show. You could see that.
Yeah, we'll do that. And speaking of midweek, we'll get back in the regular program next week, and also bring up the things that we talked about. We're going to be covering, what do we talk about? Doing some tech stocks every
Yep.
week,
Yeah.
and we'll bring that online, and we'll cover that midweek and do our regular show
Hmm.
on the weekends. All right. So 57.50 is really the next big support area, and if you really wanted to push it, I would give it a 20. Give it between 56.73 and 57.50 is the big support area with the buffer. Buffer will be all the way down to 56.73. But 57.50 is really the next level if we can't really recover 58.48 by Monday.
So 58.48 is your new resistance to get. You have to watch that and see if we can or cannot get over that.
Yeah, I would say that's definitely the case here.
Hmm.
And in between, we have some structural support right around 57.70. I mean, you guys can just look at the chart and figure that out. But now that we left the 50% of the square, our rule is, if we can't get through a 50% level, then we're going to come back, test the full square level. And these
Hmm.
basics never go out of style. So we failed here. And, now we're sort of making lower highs and lower lows coming towards the full square, which happens to be 270. And stopping here and rallying, coming down to here and testing is not the end of the world.
No.
But getting stuck below this might be a signal for bigger things. So
Wow, that
that
would make all that price action above 270 distribution.
yes, it would. And I thought it was interesting how we had, right along around these times, didn't Nvidia have that false break right around in here? It was
Yep.
right
It was
about
this
when
week. Yeah.
this week, right? Yeah.
Yeah.
So, that didn't really look exactly great as far as false breaks go. That's like a classic. And we'll see how these work out. So 57.50 is the key. But I wanted to, it's not just like a bunch of levels we're talking about. I wanted to show you guys like what if you're new to the show or if you missed the show, when the square came in, we talked about this square, how we had a 90 by 90 setting up.
Yeah,
And
that's the
you
90
remember
by
that?
90. Yeah.
And when this was setting up, we talked about it, long before that, probably a week or two before that, saying, hey, we have a 90 coming up and let's see if we can get close to price. And we did get pretty close. I think it's good enough for what we're doing.
Hmm.
And especially if we take it to this low, which is a little bit lower. There we go. And that looks better. It's the other low. So basis this, what happens is if we take the 90, the last run up, the last cycle, and then we go back to the October cycle, you see how 57.50 kind of comes into the focus, right? Here, 50% is just a couple of points, few points above that, 57.68, and 57.50 is pretty much the other 50%. So this has some kind of a attractor function. So we'll see how that works out. But obviously holding above this would be healthier than getting stuck under it.
Hmm.
Because as you guys know, once this happens, what happens is then we're gonna have to go up and test the 90 area, and that becomes a 5400. Everything starts to get get weaker.
Hmm.
So there we have the 90 cycle, and we had a few others. We have a beautiful 120-day cycle going right up into that. So there's that
That's
cycle.
nice. Yep.
Hmm. And then we had a 225
I saw
right
that one.
there
Yep.
that came in,
From
and
August, right?
yep, and a 405 from here.
Hmm.
So the point of all that is, we had a bunch of cycles expire at the high, and it's important to pay attention to them. And I think the 90 is the one that tipped us off. And we followed through with that. We were looking for lower highs, the counter trends, and they've all been sort of almost textbook, because you guys can see, we've been making lower lows and lower highs all the way
Hmm.
through.
Hmm.
And today, we got the second lower high, lower low.
Hmm.
Now, like I said, if we fail 58.48, unable to get above it right away, at least for another counter trend, then it's looking fairly weak. And I think next stop is going to be somewhere between 56.73 and 57.50,
Sure.
depending on the strength of the market, right? Or the weakness,
Hmm.
however you want to look at it.
Hmm.
So that's that. Um, and so that's the calendar day chart. And this is the ES.
Calendar
Also,
day. Yep.
yeah, ES. And here's that square. It looks much better, the 315 by 810.
Yep.
And that came in well, I would say. And we already talked about this. Well,
Yeah,
mhm. Go ahead.
I was going to say you have that daily and weekly.
And here, we talked about this level last week is 58.92. Failing that, we were looking for support around 57.50, which is 270 up from that October, which the level we talked about already. But you can see this is not looking pretty. So, destination looks like 57.50, unless
Mm.
we can do a sort of a snap reversal, and that would put this into that would make this a false break to the downside, which could work very well since this looks so bad. Sometimes when things are obviously bad and obviously everybody can see it, makes me a little bit nervous about being, you know, if everybody can see it, what's the point? So, but I think a false break here potential is high, so we got to watch that. That's why the recovery levels we talked about earlier. So then we know above which level. For example, here, if we get about 58.48 right away, snap it like, let's say Monday, Sunday night Monday. Well, here Monday, then we know that false break could have traction. Makes
Hmm.
sense, right, Ben?
Yes.
Yeah.
Hmm.
All right, and guess who started to break down below that major square? So,
Wow.
mm-hmm.
Hmm.
So 216 degrees up from the October low. The Dow, we talked about all these levels and why we were following this. It was leading on the way down, and which is kind of the problem. You can see leading on the way down is great, but leading on the way down, it took out that level that corresponds to some of these other main square levels that we talked about in the S&P. So there it is, and we're starting to break. So obviously, if we can't recover, let's say 42, 550, right? At least, we're going to get stuck under that, and that's not good
Mm-mm.
because we have a lot of overhead, and obviously all the cycles came in, and look, even the counter trend came right up to this 43,723 level, didn't even get into the buffer zone. You see what I mean? Like it was really
Yeah.
weak, and the levels are great because you can see how we sat on top of it all through the holidays and into the first week, and then today, we broke through it. Now that could also be a false break, but man, that's a little too far to be a false break. You know what I mean? It just
Yeah.
looks like a continued direction. So anyway, keep an eye on it. Um, I'm talking about the Dow through the lens of that it could be leading. Yeah, we talked about the other levels and how it could snap or continue and lower lows and lower highs, but here we're leading, so it looks weaker. Some of the other markets haven't even reached that level yet. So let's watch that. That
Hmm.
makes sense? Yeah.
Yes.
Okay. And what do we have here? This is just the December futures chart. Um, Again, we sat out 90 for a little while, well, the whole week. And
Hmm.
then we broke down. I had drawn out this expanding triangle, which I kind of spotted early on. So it's possible that we hit here, rally and come back. But again, this 90 is the key now. Now we're kind of, the more price action we see, the more we can be certain about what's really probable, right? So here, 59.42 is really important to watch, being that that's a 90 degrees up from the July, August lows.
Hmm.
Okay. What else? Yeah, that's about it. If we're almost, yeah, we're almost 45 degrees down. So that's another thing to watch. You guys are keeping track of all the levels. So we'll be 45 degrees down when we get down to about what, 58.17.
Yep.
So that's the level to watch. Let me draw that in here.
Yeah. On my daily, I got 58.12. So right there, right in that
Yeah.
area. Yep.
Yep. Yep. So that's going to be important
Hmm.
as far as support goes. All right. So that takes care of the daily charts. Let's take a quick look at the weekly. Here's the weekly ES. And
That triangle, I mean, that
mhm,
ABCD and that timing looks really, really good.
man, the ABC, they just nailed it. Look at that right there,
Right
right,
into the
right on the
timing.
money.
Yeah. Yep.
That's good.
I mean, that's price and time right there.
Hmm. So on top, when you see this happening on a weekly chart, you really want to see what's happening on a daily basis, right? You want something to
Hmm.
trigger that. So I think what happened was as this was coming in, we were watching that 90 to see if the 90 would terminate that leg. And looks like it did. I mean, this is about as classic as it can get as far as Gann stuff goes. You
Hmm.
have a weekly or monthly cycles expire, and then you have a daily just to sort of turn it over. So far it looks great. From a technical perspective, um, the 225-degree level is 57.97. Let me type that in here. So watch that. We talked about this last week. I mean, really the big stuff is if we get stuck below that, then we're going to have some problems.
Hmm.
Um, Even now, it's sort of pending problems, but but if we get under that, it's going to get real. And for the upside, 59.81 is resistance. So we'll see what happens. And Ben, as you pointed out, we have outside reversal on a weekly basis this
Hmm.
week, which means we kind of had a false move to the upside, then we reversed altogether. So this is, again, it's not good news for the bulls
No,
necessarily. So all that looks very, I mean, it looks straightforward and very textbook-like, which means everybody's seeing it. So my only sort of reservation here is like, wow, everybody's seeing this. And it's not often that something big happens when everybody's looking at it. So
that's the think like a criminal hat you got to put on.
yeah, exactly. Exactly. And that's the whole thing, right? The reason criminal gets away with it is nobody was watching.
Right.
And so anyway, other than that, those are the levels. As far as the high goes, looks like we came in. Everything looks okay. I don't have a problem with it. We have another weekly chart I just wanted to bring up just for a second. This is the cash chart that we've been watching. The other one was the futures chart.
Hmm.
So here, which my gosh, when we drew it up, it looked like a joke, right? Like, oh, that's not going to happen. How is it going to come up way up to here?
Hmm.
And sure enough, we got on even exceeded 6,000. So all these things can happen. A, B, C, D from the 2020 low. Now I drew a line, 144 degrees up from the 22 low was 58.10. And so we've been talking about how that's the key level to watch. And, you see what happened today, right? The low was 58.07. Okay.
Hmm.
So we're there. We tapped it. This is what I meant when we were looking at the dailies. If we're going to reverse, we need to take over some of those upper levels right away. If we get in here and start getting under this, it's not good. I mean, it's good for trading.
For
It's
the
not good
short
for the
side.
bulls. Yeah, it's not good for the bulls in
Right.
terms of what everybody else is looking for, right?
Hmm.
So that's the story. 59.50 is resistance for any kind of a pounder trend. You can see that last week, and the highs were right under that. Somehow the juice was there this week to get above and do a false move to the upside and reverse. And that's, yeah. So 58.10, you guys, 144 degrees up, very important level. You saw all those other things that came in. So there's plenty of evidence for the high now. And we also got, lower highs and lower lows. So everything's sort of moving to the downside. If you guys are trading to the short side and be watching us, you're doing fine. There's nothing unusual, right? Everything's working by the book.
And the key thing is we're getting, and I hope you pick this up if you're watching these videos, we're getting the evidence that we said we need to see in order to
Hmm.
confirm the cycles and the price and time relationships that were showing up in December and November and moving into that high. We're starting to
Right.
get that evidence mounting up.
Exactly. And that's exactly right. Now let's take a quick look at the 30-minute. So this is the one we update, what I post every day.
Hmm.
We were looking at, so, we started this whole thing at 60.33. We failed, came right down to the next full square, which is 59.42. We sat there, well, most of the week.
Yeah.
and started making lower highs, and failed early this morning. And that was a failure here. Went right to the half square, 58.52. There's a zone here between 52 and 69. I comment on all these every morning. So if you guys want to follow it and follow up, keep following during the day. Follow us on X. Both of our links are in the description. And Ben, I know you post a lot more than just the S&P, so
Sure.
NASDAQ and everything else.
Hmm.
Anyway, so that looks like support for now. And my key, what we're watching for next week is to see if 58.52 gives it up or not. I mean, that's really the key. I mean, every week it's been one of these major levels. And you can see what happened at 59.42. We were mean reverting for a while, being that these are 30-minute bars, and drop right into the next level. So here, and we got a little bounce off of it, which, I was thinking that was a nice false break. But now it looks like, it's a little weaker than we thought. So, and we closed right in the zone. So not much to say other than let's see if we fail this, then I think a lot of the things we talked about in the daily chart's going to come to pass
Hmm.
unless we recover quickly. So keep all those numbers in mind as we move into next week. Anything I need to add here, Ben? Or
No,
we
I
got it?
think that's good. They,
We're
they
good.
have all the levels now
Hmm.
on the S&P and the ES.
Right. And Ben's going to cover the NASDAQ.
Hmm.
So wait for that. That's going to come up in a minute. Bonds.
The gift that keeps on giving.
Man, I mean, I love that, when bonds are trending, it's just, that's it.
Yep.
It's it's good. So not much to add here. The trend is down. We talked about it getting to the 50% level last week, and we got there. And yeah, we could get a couple of day counter trend and consolidate up here. I don't think bonds are done, but clearly this 50% level is important. So let's see what happens. I mean, this is like a trending market. We're kind of trying to see where where it might find support. So 110.23 is a level here. If we take that out, and we've talked about this quite a bit, it just looks like we're going to take out the October lows,
Yeah, it sure
and that's,
does.
yeah, and that's 107.07, a little bit around that level. So it looks like 107 is going to get hit before all is said and done. That's what it looks like. We have a 90-day cycle coming up, and that's on January 22nd. So we could do a 90 by 90 and get down to, 105 if that's in the cards.
Hmm.
So that's it for now. And we could do that, we're out working at ABCD. So that's, you know, potential, right?
Absolutely.
All right. So here is the weekly 114. We were stuck there for a couple of weeks, and we talked about how weak it was looking and potentially sort of completing this ABCD down. It looks like we're on the way to do that. We're doing that. And 114,
Yeah,
now this area is resistance. You can see 114. So I think bonds are kind of trapped in here. We just dropped a little too low. Now it's really this 107. Let's see if we can get to the, and we know what the rule here with the ABCDs, if the ABCD fails, meaning if the price goes, penetrates a little beyond, then it's probably going to continue a little bit more.
hmm,
And that'll get us down to some unheard of levels. So we'll see what happens. But for now, I'm really thinking this 107 level because we're probably going to go up and test this level. Doesn't it look like that, Ben?
absolutely. And it's
Um,
either going to break through and keep going, or it'll give us a false break. So there'll be some good trading opportunities
there's
there.
definitely good trading. Most of these markets are really
Hmm.
primed and moving.
Hmm.
Speaking of primed and moving,
Yeah.
just before the breakout, I remember we were talking about how
Yeah.
boring and sleepy is looking, and not to take the eye off the ball, because when this breaks, we're going to move. Sure enough, man, look at this. It worked exactly, right? We broke out
Yeah.
through the triangle, and we said the next thing we want to see is have it sit above 73.50. What happened here? It sat right there on top of it.
3 or 4
Not,
days and then
yep,
boom.
now boom, now we're moving higher. 79.50 is the next target. Obviously, if any pullbacks hold above 73.50, it's just, I don't know, just more juice, more
I,
evidence.
I'm going to show my monthly chart on that because the circles are really interesting right now at the spot. So
Hmm.
in my segment, I'll show the monthly on crude.
Oh yeah, speaking of circles, I have one too.
Yeah.
It's a different one.
Yep.
So 79.50. So looks like crude is on the way after this long wait. We didn't get the sort of the false
The
break,
flush. No, no
the
flush.
flush, but that's all right. We'll take a grinding move up. It's okay.
Absolutely.
So today was like the big wake up, coming off the
Yeah.
73, but we knew so long as it was above 73.50, it was upside was the only way.
Yep.
All right, so that's the daily. Let's take a quick look at the weekly. It looks beautiful. We've been
Hmm.
watching this forever, and it's about time we get a move. And
Yeah.
if you notice how tight the volatility was, right? You see
Hmm.
how it shrank down to almost nothing before we started. So if we get 1, 2, we should probably get one more. If we clear, if we hold 73.50, we should certainly be moving higher. There's no question. And speaking of circles, for
Look
some
at
reason, this
that.
is off just a little bit, but it
Hmm.
looks like it picked it up, and now so I'm going to pretend the
Accelerating.
circle,
Yeah.
yeah, I'm going to pretend the circle's actually right there,
Hmm.
and maybe I'll try to see if it fits that somehow. Sometimes you said it early on, and then, as time progresses, you need to make a little bit of a back adjustment. So you can see how this is a
Sure.
little bit lower. Maybe if this goes a little bit higher to touch that low and that low,
Yeah.
then it'll
Yep.
tilt the circle this way to touch that. So anyway, either
Hmm.
way, the main thing we mentioned last week was, and the week before, is not more than the circle. It's really the trend line. So you can see how this week the downtrend line got taken out, and this is a huge deal. And we'll watch it, but basically now we can, you know, count crude to be trending, at least at the early stages, especially after the next counter trend. And looks good. Looks like the wait was worth it.
Yeah. Like it wants to run.
Hmm. And it'll be good trading. I mean, I can't imagine like what's going to make it move into the
That's what I
uh,
was thinking. What's the geopolitical news that it's going to have to come?
it'll come. I mean, we'll see
Yeah.
and we'll laugh about it, but
Yep.
it'll come. It always
Yep.
does.
Yep. Somebody knows first and they're starting to
Hmm.
act on it.
Yep. All right. On up to gold. I mean, it's fairly simple. We're consolidating. I drew up this triangle a couple of weeks ago. We're still well within it. Not much really to add. Um, long as we're inside of it, we're consolidating, and it's possible that it's fine. The dollar was up and gold was up, right, today,
Yeah. Yep.
and crude. Oh boy.
Hmm.
Um, so long as we're above the 50%, any pullbacks holding above 50% is bullish. So we'll watch, and indicating that we could be getting ready to break out. So let's watch this closely. But so far, it's still in the triangle. And let's take a quick look at the weekly. Weekly, well, triangle's perfectly intact.
Yep. Another triangle.
And we could have another 1 or 2 bars within the triangle. Otherwise, if we break it, we know the resistance zone here.
Hmm.
And this all looks, we've been talking about how bullish it looks, but we'd like to see, a little bit more evidence. It's
Hmm.
not quite ready to go. Still kind of consolidating. So that's that.
Copper
Here's
had a nice
copper.
week. Yep.
Copper had a great week. We just drew this line in last week, talking about, it's getting really coiled in this little triangle, and it should be breaking to the outside.
And man, you could see where you were pointing out that 60-degree line was key.
Yes, the
And we were,
405. Remember we were talking
yeah,
about that?
yeah, and we were dancing around it. And again, they pushed a little below it and then boom.
Yeah, yeah. And so copper looks good. I mean, look, this is a big time trend line that we broke. So
Hmm.
long as any consolidations hold above that, let's say hold above 415 or so, copper is very good. And if we can hold above 420, even better. Potential false break here, which would mean that we're consolidating for a little bit longer.
Hmm.
So let's watch. watch that part, and let's take a quick look at the weekly to see what's happening. So the weekly, took out. We were talking about how even though it's hanging here, it's hanging tight, which is kind of bullish, right?
Mm-hmm.
Last week, and we were looking for a break above 144, and there it is.
Yeah,
So
and we
key
were concerned if it got stuck under 144, and it didn't this week.
exactly. So now, as long as we can hold above 420, I think we can figure something out, move on.
Mm-hmm.
If it's not ready yet, that triangle's still kind of in place, so it's possible that we spend a little bit more time. But it's starting to, show some life
Mm-hmm.
after all that validation. Silver, I think we talked about the 50% of the square being really the level to watch, 31.50. And we basically got there. I mean, for it to continue, we have to obviously get on top of it. The
Mm-hmm.
move from the lows, which was, I think we talked about it last week, that was a 90-degree move. Remember, I moved the square.
Yeah.
So remember that? Yeah. So being
Mm-hmm.
that was 90, and we talked about how that squared out, 45 in time, that looks squared. So higher low, we're expecting it to move higher. And as far as this square goes, 32.25 is about the 45-degree level.
Yeah,
But
that's the key. That 32 and a
mhm,
quarter, 32.50 is
mhm.
important.
So long as that's holding, I think, I mean, long as we can get above that, if we can get above that, you can expect
Then
it to
then
move
we
higher.
run. Yeah, we
Then we
run.
run. Otherwise, probably a longer consolidation here,
Mm-hmm.
which is just fine. All right, let's move on to the dollar. This is just beautiful. This is easy trading in the currencies.
Yeah, really
Doesn't
nice.
happen every day. So you want to really take advantage of it. We were talking about how price was holding above 60 degrees, and what happens when it holds above, right? There's a higher
It goes to the half
probability.
square.
Yeah, it's gonna move higher, and which it did this week. And the 1/3 of the square is 110.40, and 50%. So that's pretty much it for the dollar, as long as we're trading above 107.85. I'd say 107.25, but we have
Hmm.
structural support here, 107.90. As long as we're above these levels, I think it's upside is definitely in play.
And where's the half square? What's the level at the
Well,
half
half
square?
square happens to be 90, and that's in time, that's end of January,
And the
and
price?
111.60.
Yeah, that looks like where we're heading.
So if I do this, look, check this out.
Switch it to 90.
Mm-hmm.
Oops, that's
72.
72.
We just broke through, right?
Yep.
There's a 90, and that could be where we're headed.
Yep. Time and price
And
target right
and
there.
and you can see the 60 right there. That's where we were
Hmm.
sitting.
Hmm.
So the 60 worked pretty well when the dollar wasn't very active. Now that it's active, we'll have to keep an eye on the 90 also.
Nice.
Yep. All right, let's move on to the weekly. Can I say party continues?
Stretching out to the 270, right?
Yeah,
Or
everything
180.
looks,
Sorry,
yeah,
180.
yep.
Hmm.
Everything's looking good. There is a potential ABCD here,
Hmm.
and that's well beyond 112. That gets up into 113.33. Would you believe it?
Wow.
So 112 is like a key level all around, because 180 degrees up from the 2020 lows. So let's see what happens. And obviously, if we take out 112, then we have the old
The
highs
old
to deal
highs.
with, from
Hmm.
22. And yeah, and everything that brings along with it.
Hmm.
Let's see how it goes. And you guys know I think everything you need to know to trade this for the next week or so. Euro behaving perfectly well. The trend is down. We've been watching all the counter trends at key levels. The 90 didn't really quite, price wasn't able to take out 90, and we're trending lower. So I think lower for euro, obviously, right? Is anybody going to argue
Hmm.
with that?
I don't think so.
I'm thinking even like 5-year-old kids are probably like shorting the euro. All
Mm.
right. So not to make, light of it, it's not going to, it always looks easy when you're plotting it, right? There's always something that could turn everything sideways. So always keep an eye on things. Here, 41.62 was the key level. That was 45 degrees from the low in 2022. You can see how we held, we had that little inside bar, couldn't quite do it, false break, and then took to the downside. And ever since that, we've had lower lows, lower highs. So looks like there's more to go before it's done. And this is the kind of move we were talking about, when it fails, these big consolidations and triangles.
Hmm.
So it's great. We were watching this 108 level forever, it feels like, since 23. How, see how we wrapped around it and finally did the false break, turned around, and here we go. So that's it for the euro.
Hmm.
It's
Uh-oh.
awfully quiet,
Hmm.
awfully quiet, and probably isn't that like a Chinese New Year? I think going on now, so it might be
It's
that.
soon,
It's
soon.
soon. Is it coming up? Right, end of the month.
Yeah. Yep.
Take below 19,450. We're definitely in a little bit of soft conditions. 19,232 happens to be 72 degrees up. So anything below this low, let's say 19,090, you want to be careful. So, and we closed here at 19,064. Well, what we got going, we have lower lows and lower highs. So we'll see what happens. But we do have this big old ABCD level, which is 18,430. Let's see if we can get there. But basically, this is really looking soft. Are you going to cover natural gas?
Yep.
Okay, yeah, okay. So we were pretty good last week. We talked about how it's starting to pick up. Sure enough, very tight pullback
Pull
and
back.
and
Yeah.
yeah, and back on up. So all that is looking great. Yeah, let me put it back to you. Cover the NASDAQ and Bitcoin and all the other things that you have,
Yeah.
and finish up. Like we said, we're gonna start on the regular schedule next week.
It
And if you
feels like
guys,
2025 has been a lot longer than a week, though, hasn't it? With all
my
that
goodness,
action.
really, right? A little bit of everything
Yeah.
thrown in. And I think it's not going to get better. I think it's going to be very active in at least for
Yeah.
the next 90 days. It looks like very
Yeah.
active. So
Yep.
stay tuned. And if you guys like our work, please remember to subscribe, like, and especially like and share the video. And what else can they do? And hit the alerts, right? So you
Hit
know
the
when we
alerts.
upload, because
Sure.
we don't have a regular cycle. We don't have outside. Everything's done in house, and we kind of up do the videos and upload as we have time. So
Hmm.
doing the alerts would help, because then you know when the videos are up. Right? Let me put it back to you.
Okay.
Okay, more triangles breaking down.
Yeah, and more prices getting stuck under important levels.
Exactly. 21,366. We talked about that last week.
Yeah, last week, and you can see we tested it early in the week, then we
Wednesday
crisscrossed
and
it,
Friday highs. Yep.
and then we got stuck under.
Hmm.
And you see what happens when you get stuck under, the pressure begins to go the other way. And
Better
as
to
long
sell
as we
than
were
buy,
above
right?
it, right? We came
Hmm.
up, tested it, just going into the high, and there's your perfect like get above, stay above, launch it to the highs,
Yep.
and now we're sort of in reversing that. The key levels this week, it's pretty obvious now, 21,366. We got to get above that. If we don't, it looks like we're heading to 2642. You can see if you look left there, why we probably found some support there today, those July highs. And now, the if we lose 20,642, then we're heading down, to the 20,000 area again. But we had lots of timing come in there. We had timing come in July. We got a nice reaction off of that. Now it looks as if this timing was very good and, sort of kicked off the next section we have to look for. We had 112 high to high. We had 30 low to high here, 95 low to high here, from the August low. So there was good timing in addition
We
to,
had enough. Hmm.
some other cycles that we had that hit in there. So the tide has turned here. Now it's just a matter of, we watch counter trends.
Yep.
If we rally back up to 21,366 and fail, that's a fat pitch. So we're going to be watching for that, and we're going to see how it how it acts if it comes down to this half square, like odds favor right now. Does it find support there, or do we slice through, get stuck under there, and sort of start stair stepping down?
Hmm.
Let's take a look at the weekly. Weekly, we had our really good timing here, and
Hmm.
then here we got a nice little outside reversal this week, and we closed below the half square, 21, 082, right up against it, but still below it. So weekly basis, getting stuck under here, like next week, if the high is less than or just at this 21,082, that's pretty bearish.
Well, we
It
have
would,
lower lows all around.
yeah, and we got lower lows. So this combined with, the daily, combined with the monthly. Let's look at the monthly. Again, we called out the timing, said good timing, good price, pushed a little further, about a quarter of a square extra. And now we've reversed, and so far on the monthly, we're below this key level on the monthly of this 21,121. And if we get stuck under that, this is how the turns are made. Lots of timing into the highs. So uh, not looking super bullish on the NQs. This is one I really like that I've been showing the last few weeks.
Hmm.
Look how this one by one just stopped both rally
Yep.
attempts.
Yeah. Not
You
to
know,
mention
and
the high.
and we failed at the 360.
Hmm.
Right? We
Very
pushed
nice
above
chart.
it,
Hmm.
came down, tested it, and now we're pushing down.
Right.
In
Very
addition to the
nice.
timing at the high, it's just this is really, really important. This
Hmm.
360 up from where this whole thing started in October of 22. And now we're having the evidence that we needed technically, right? Because we saw this 360 and we said, okay, let's see what happens. Do we stay on top? Do we get stuck? Can we sit on top? Do we get stuck below? Well, we're starting to get our answers now. Lower highs, lower lows, pretty simple.
Yep.
Anything you want to add here on the NQs?
No, we're good. I think the pattern is the one to keep an eye on. Watch the 50% level. Watch the counter trends. Obviously, that one by one is going to be important going forward.
Yeah.
And yeah, I mean it's not that complicated when you look at the trend. It looks like as long as we're making lower lows, we have to kind of stay with the trend. So.
And it's part of the topic. If we have time left, I want to talk to you. You do have to flip your brain. You have to flip your mindset a little bit,
Hmm.
because
Hmm.
in all this, we're looking for, what pullbacks are we going to buy here? Now we got to start looking at, what counter trends are we going to sell,
Hmm.
you
Exactly.
know? And so we'll talk about that, the psychology behind that, and how you do it, and how it might help people flip the switch. Let's go to Bitcoin. When we made that high, when I saw you and I talked about it before the show, when I showed you the weekly chart, I said, "Man, Barry, it looks like we made a high, pretty significant high on Bitcoin."
Yep.
I don't think it's like the all-time high. Bitcoin's going to zero, all kinds of things. I just thought it was a significant high. And as we look at the daily, it's starting to play out. This is a one by two,
Hmm.
and we lost that.
Yep.
And remember, we had been holding that one by two since October.
Hmm. And we
So we
came from below and kissed it.
and we kissed it and couldn't, a couple times. Here we tried, and then back here again, this latest rally we tried. But the bigger thing is we're failing so far at this 96,619.
Hmm.
Because look at, this is where we battled on the way up, right? And then we finally got over it, went up and made the high, and now we're pulling back, got stuck under the half square here, and now we're closing the week, at least the week Friday,
Hmm.
under this 96,619. Again, remember, I always say, keep in mind, we could pull back, to this 73,666 and still be bullish.
Right.
So the question is, though, if we're looking shorter term, the push is to the downside now because we're getting stuck below these levels. That's daily basis. Here's the weekly chart. For those that haven't seen it, this is where I called out. I think we've made a high here,
Yeah, exactly.
and this was a beautiful chart.
Hmm.
A 70 square of 72, and it nailed the high, and now we're sort of bouncing between on the low end in the low 90s and the high
Hmm.
end that 108, and we're trying to see, we could potentially just correct in this half square for a while, right? Burn time, burn off the cycle, stay bullish, and then go again. But if we get stuck below here, then it's down to the 71.
Yeah, I think the time between 89 and 71 is going to be rather quick, just like on the way up.
Yeah,
Yeah.
it was 2 bars, right? 2 weeks.
Yeah. And I think the
So
down won't be much different.
yeah, and and then we really want to see it hold here, right? We don't want to see it, lose that support because that was previous highs on a weekly basis. Here's the monthly. You can see why the low 90s are super important. We're out of the
Yeah.
square. Is
Hmm.
it possible we start, following the square down and doing a, faster move down here into 75? Yes, it's possible. First
Hmm.
thing we'd notice is if we got stuck under or a weekly close under this 93,000, that would be bearish monthly basis. For now, we know Bitcoin is correcting. It's still bullish longer term, but this structure, as you can just visually see, is very different than this.
Yeah.
So we're transitioning into something else. What exactly yet? We don't know. We just know the levels to watch and give us the odds of what's more likely to happen. Below 96, we're more likely to go to 91. Above 96, we're heading back to 102.
Hmm.
And that kind of sums it up on Bitcoin. Anything you want to add on Bitcoin?
Well, I don't think that correction is done yet. So I think there's probably a lot more to go. And the 91 level is the one to watch because boy, if that goes, there's instant 73.
Yeah, I think you're right. I
Not a whole
think
lot in
there's
between,
no, not a lot. It did not spend a lot of time. It went pretty
hmm.
quickly from 73 up to the 91. So you're right. It's what do they say? The stairs up, the elevator down.
Yep.
We may see that.
Yep.
On the commodity side, let's talk about the commodities. Today there must have been a crop report because at noon I saw a lot of good activity in the grains. So we'll talk about corn and soybeans. The softs are still weak. Sugar's correcting. Cocoa's looks like it's correcting. Coffee is consolidating. Cotton continues to go sideways. Barry talked about gold and silver and copper. Those are the metals are looking like they're, trying to hammer out a bottom and be able to rally off of those. And we'll also talk about, I'll go to crude to supplement what you did. I'll show the monthly circles and we'll talk about nat gas. But let's start with corn. Interesting move today. Look at that bar today. Pretty different than the last few weeks of the grind, right?
Hmm. Looks like crude.
Yeah, yeah, exactly. Looks like crude. So we've made the ABCD target, but more importantly, we're pushing and consolidating and capturing with gusto this half square, right? Because we got above it, and here we just been sort of chip chopping around, really small. You can see this little triangle that formed, and then today we busted out. So 447.25 now looks like we have that fully captured. The next move is up to around 500.
Hmm.
And if we can sit on top of 500, then momentum kicks in on a daily basis, and we're really going. Let's look at the weekly. Like a nice grind up that one by one, isn't it?
Yeah. 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 Perfect.
And you can see why this 500 area is important when you look at the weekly, because the weekly half square is 517.
Hmm.
Basically, until we get above that, we have all this overhead. But once we
Hmm.
sit on top of that, then we can start moving. And
Hmm.
then from 517 weekly basis, we go to 620. But this corn surprisingly is leading right now, leading the grains.
Right.
And it looks good. Let's look at the monthly. Important move the last few weeks. Took out a monthly downtrend line. Remember, this is the Russian Ukraine invasion highs, right?
Mm-hmm.
That we got. And that downtrend has been in place since then. Last month we punched through it, but we punched through it right below the full square. And now with today's action, we're above the full square. We get a close above this, 462 area. This is what we're sitting on monthly basis. That whole huge sideways, 6, 7 year congestion that was building up energy to launch that. That's why it's a
Mm.
really, really important spot for corn. So we'll be watching that 462 and the other levels that I gave you on the weekly and daily basis because this is how this thing gets started. You can see
Mm-hmm.
what it did. Look at what it did in this consolidation, right? We'd push up, sell off, push up, sell off, push up a little higher, sell off again. And then once it got through, it goes.
Right,
So
right.
monthly basis, really, really key spot.
Mm-hmm.
Anything else you want to add on corn?
No, it looks good. And we talked about, starting to trade it to the long side ever since we got above 395 and that 416. I
Hmm.
remember back in the day. So it's doing fine.
It was grinding up. Now with
Mm-hmm.
today's move, we may start seeing more speed, more momentum, more
It's going to
speed.
start picking up, yeah,
Yeah,
picking up some momentum. Yeah. Mm-hmm.
yep. And that's why I wanted to bring it to everyone's attention this week. Now let's look at beans. Why do I want to look at beans? Well, we're breaking this downtrend line. This is again the one from the Russian invasion.
Mm-hmm.
And if you look at it, Barry, we had the low, which we called out. We had the first push up, did an ABCD down. So this is potentially three kicking off, right?
Mm-hmm.
Your third leg. Now, the key level here is this full square. I didn't write it in, but I'll put that in. 1,035. So this is the level that gets us really kicking momentum in on a daily basis.
Mm-hmm.
So here we want to watch and see next week, can we push above this and sit on top of it? Because
Mm-hmm.
then we've got all the price action from basically, August to January, we'd be sitting on top of it. And that's the
Right,
kind of base you need to launch.
right.
But look at the bar today.
Yeah,
So
strong. Yep.
yeah, so we may be kicking off something here. I want to watch it. I want to make sure we're keeping an eye on that 1,035 level.
Mm-hmm.
Here's your weekly. On a weekly basis, it's 1,060, and that
Mm-hmm.
gets us completely out of this sort of bottoming phase that we've been in since June, July last year.
Mm-hmm.
And then we're going to go up, and the next challenge is going to be the 1,283 because then we're dealing with all this here. But that's a hell of a move from here to there.
Right, right.
Let's look at the monthly. The monthly looks nice, doesn't it?
Yeah, very nice.
Probing
Stopped at the right
here.
place.
Yeah, but look, this is, it didn't happen in a day or two. This is 5 or 6 months we've been down here probing.
Mm,
And now we've got a higher high this month already. The prices stayed above so far this month. We were above this full square at 983. And then the next thing we do is we're challenging that downtrend line. And you can see corn already broke that.
hmm.
Soybean still has to do it. Wheat is still chopping around sideways, so I won't talk about wheat, but corn is furthest along, has the most momentum. Soybeans is sort of where corn was a month or so ago.
Hmm.
So we want to keep our eye on this one as well because it does look like on the daily basis at least momentum's kicking in, and then that'll translate to weekly, monthly.
Hmm.
What are your thoughts here on beans?
Well, I think it's a good pullback, good correction, and it held at the correct places, support wise, structure wise, square wise. So looks like we're ready to move up.
Hmm.
And the triangle's breaking. There's a little tiny one there too. If you can check it on
Yeah,
there.
yeah, right here.
Hmm. Hmm.
Yeah. Yep. All right, let's go look at crude. And here's why I wanted to show this to you. This is the monthly with the circles. And here we were talking about for the last few months when I was showing this how, we don't want to start getting stuck under this 71.59 monthly basis because then we could really push down and potentially, have a big sell off, right? It could catch
Hmm.
momentum here. Look at the high this week, Barry. It's not only it's at the top of this wedge, this wedge trend line, and it's at the top of the circle. So
Key level.
next month is going, the bar next month is going to be massive. I'd love to see us push through here and then get a bar out of here
Hmm.
because as you could see what happens when you're going along this edge and then you lose it, you get a fast move, but a lot of times, not every time, but often
Hmm.
you'll get a fast move in the opposite direction. Well, technically we've been going down since 23 on the edge of this circle. So
Right.
if we can bust up and out of here, there's the potential that, again, staying above 71.59 opens up the half square of 101.
Hmm.
It could be a fast move to this 101 area. And
Right.
this thing's been acting pretty well on, timing wise on these. The next timing here would be, if let's say if we went up and made a high, we're talking about end of this year,
Hmm.
November, December this year.
Hmm.
We could,
Yeah.
potentially be 101, or if it really goes crazy, it could go, the full square up to the 120. Cycle wise, if we do what we've done in the past, like low to high, 120 months, it'd put us into 2030 for the
Mm.
high. If we look at 2020 as the low,
Right.
it's
Right.
about a 10-year cycle there. So this is worth watching for the next few months to see how this circle how price deals with the geometry of the circle and the square right in this little corner that we're getting
Hmm.
wedged into. Any comment here on the circles?
No, it looks great. And I like the combination of the lines and the circle. And so I think 7150 area that you have, the 60-degree line is the one to watch. And we'll see how it breaks out.
Yeah. Yep.
It could easily do an inside bar or pull back and then run again. But either way.
Yeah. 71.59 is key on this
Hmm.
monthly basis. And I think your range is what you were at 73.50 on the daily, right?
Yep. Yep.
Yeah.
Hmm.
So we're right in here. We'll see how that does end up playing out.
Hmm.
All right, let's go to the last one. Nat gas. That's the monthly. Let's start off on the daily.
Hmm.
So we came up and we did this ABCD like a week and a half ago, 2 weeks, 2 weeks ago, and then we
Hmm.
sold off. And I said, well, it's okay. We completed an ABCD and now we're pulling back. Let's see if the half square holds it. Well, look where the low came.
Hmm.
It pushed a little bit over the half square, but then it got right back on top of it. Here's that, staying above. 2 days we stayed
Yep.
above, and then we launch right up to the top of the square.
Hmm.
So basically the level of 401, 402, if we can push above that, stay on top, force it opens up 460 daily basis.
Hmm.
We're fully out of this sort of congestion zone that we identified. We had this congestion zone, then we pushed up a few times out of it. So I added this extra one that sort of captured price again. We're
Hmm.
fully out of that now. See, we tried to come back into it here, gapped up, tried to come back into it here, pushed up. So this the key level right now is that we need to get above is this 402, 401, 402.
Right.
Sitting on top of that opens up 460. Let's look at the weekly. The weekly and the monthly are really exciting, right? Because we had these big long triangles. We broke out, tested
Hmm.
it, and now we're moving, right? 371 weekly basis is super important. Long as we're above that, 470 on a half square. And
Hmm.
as long as we're above it, look what we're sitting on top of. Most of the price action of this commodity going back years and years and years. Like this is going back 10 years. You can see most of the
Yeah.
time prices spent below 371. We had this little spike, we had this spike here, we had this spike here. So sitting on top is, you know, when the spikes come. If we look at the cycle here, if we do 90 weeks, puts us into just this year, November of this year, mid-November.
Hmm.
And that
90
crude
week
thing was
run.
November, December, so it could potentially be around the same time. Let's
Could
see.
be. Yep, yep. But they're all
Now,
starting about the same time is the thing here.
yep, here's your monthly view.
Hmm.
The main takeaway here is, and you can go back and listen to the shows from a year ago or so. We were talking about when price got down to this 160 area, we said it's just a value.
Hmm.
Every time
Yeah.
it's been down here since 94, 95, the buyers have come in. Well, then we're tortured with this triangle. We're now out of the triangle and pushing up towards 488.
Hmm.
And as you can see where that half square goes, 488 is also key
Right.
because monthly basis, this whole congestion from 2009 to 2000, 21, 22 was below 488.
Mm.
So when we get up to 488, we'll test and we'll see. We sit on top of it, then we're in for another spike.
Right.
And that's it. Anything you want to add on gas, on that gas?
Well, I think it's all coming together. We've been watching it. We watched it at the lows. We talked about the value and how you can't go wrong. Just
Right?
looking at so many years of price action, and now it looks like we're starting again.
Yeah.
And looking at the last start, up in the highs in 22, looks like if we can take out 750, settle above that square you have there, square 52, the weekly square,
Mm-hmm.
I think we can go a lot higher than 10.
Yeah, let's see the weekly.
And can you go back to the other one just for a second?
The monthly?
Yeah.
Yeah.
I'm talking about the 10 being the quarter square. Yeah, right there.
Mm-hmm.
I mean, it just looks like it'll take it out if we systematically take out these levels and we settle above. What I'm saying is, if we settle above 5 and we take out 758, seems like we're going to go to new highs for you know, not just for the year, but for the last 10 years, maybe.
If you look at the last cycle too, there's an
Hmm.
initial spike, there's a pullback, and then there's the big spike.
Big spike. So I'm thinking we might be going in for the big spike.
We might be coming up on the big spike.
Which is a
Absolutely.
couple of years, probably. I think your timing is that 90 weeks, 90 month
Yeah, right out
is
here,
probably pretty good timing there. Yeah.
2027.
How will we get there? I think. Anyway, these are the beginnings. Let's see how it works out. Let's watch the counter trends and all of that.
And I think this is a good looking at how this is transitioning from, sort of a bear phase to a bull phase. It's good in talking because we do a lot of work on the S&P and the major markets and the ES and we've been talking about this potential transition,
Hmm.
from bull phase to bear phase. And I think it's really important to help people, with their mindset and how they look at the market. And we've got about 5 minutes left, so let's jump into this.
Hmm.
If assuming that the highs are in, Barry, let's say on the ES and the S&P and the
Hmm.
NASDAQ, we've got evidence. We had cycles at the highs, which we called out. We're now having evidence, technical evidence, and price action mounting up, suggesting that yes, that was significant.
Hmm.
So assuming that the high is in, do you look at the hmm markets differently now than say you did in June or July? And if so, how does that change?
I can talk about from my perspective, but everybody has different, I don't know, goals, systems, ways of looking, and a timeline along with the horizon.
Hmm.
You know what I mean? Depending on how, if you're day trading or looking at your portfolio, adjusting that. So just from looking at the work that we talk about, we show, I would say once it's really my take is it's exactly what we talk about, which is we were waiting to confirm the high, which is really that first counter trend is what we look for ideally.
Hmm.
And once that comes in, we're just really looking at the opportunities to the short side. Now, the issue becomes, how long will these opportunities last? We can just going to trade uh, you know, just around the counter trend and next to the next support level? Are we going to trade much longer term? Are we talking about a monthly trade or weekly, a couple of 3 months, 90-day trade? You know what
Hmm.
I mean? So your perspective and the horizon really changes the strategy that you're going to have to come up with. And well, from my way of looking at it is really using the squares. I just go from level to level. And of course, then we're going to get these big highs like in 2020, 87, all of these sort of monumental highs where
Hmm.
you just slip through a bunch of squares levels at once. And that can happen. But in the meantime, I mean, that can happen. And I think if we follow our systems, we'll probably end up catching those, no matter what comes, because you're looking at the correct side. You're not trying to buy a dip when you should be selling a rip. So I think it really comes down to which way are you trading it. And if you're trading the long side when the market's going down, obviously you're going to get hurt. And if you're trading the short side when the market's going up, equally hurt.
Right.
So
So now
here,
that we've now that we've had this shift, are you now more looking at selling counter trends up as opposed to buying dips down?
absolutely, absolutely.
Okay.
And we've been recommending that. That's part of the idea of even, the fuse lines, the 30-minute updates that we do, and the daily. We talked about that 60/20 and the cash level and all the other different levels. It's really about where is it going to stall out. And that's
Hmm.
where you can use the trend lines, Gann lines, all of these things is really to isolate where the counter trends come in either direction. But now what we had is, we looked at the evidence, we looked at the 90, how the 90 kind of tripped the larger weekly cycle. So when I see those things in relationship, then I have a higher confidence that okay, this is really the direction to trade, and you focus on those counter trends. You really try to isolate them, minimize your risk. And the whole point of the counter trend is it's very, that's the only place you can just really minimize the risk to to the highest possible level or the lowest possible level, I guess, in terms of risk. So that's really it. That's all I do. But the
So
harder part is really about, staying in the trade and
yeah,
not because, when market gets really, let's just say, uh, catch some momentum to the downside, we get a lot of volatility, right? We'll rip to the upside, equally, we'll rip to the downside, and you have to be able to manage that. So that,
right.
to me, that's a harder sort of process than to get in on a counter trend, right?
Yeah. So let me sum it up and then
Mm-hmm.
we gotta take off.
Mm-hmm.
So just like in October of 22, when you said, hey, it's time to start looking at the long side and watch pullbacks to buy,
Mm-hmm.
now it's time to start looking at the short side and watch the pullbacks, the sort of counter trends up to sell.
Mm-hmm. Exactly. That's in summary. And but we've been saying that since the high came in. As soon as the
Yes.
high came in, we said, look, the next thing we're gonna look for is a counter trend. Boom, we got that. Went lower,
Right.
counter trend, lower high, went down to make a lower low. Great, got that. Now, next counter trend. So we're just kind of following through with the market. The other thing to really watch would be, where the support levels are, because you also want to take some profit
At
when you,
support. Yeah,
so maybe we
exactly.
can talk about that next week, but that's
Yeah,
the
no,
idea,
that's
right?
great. Yeah,
Hmm.
no, really appreciate that, Barry, because I know people have trouble with that transition, and I think talking about it and the psychology you have is going to help traders, get on and stay on the right side of the market.
Mm.
Listen, everybody, we appreciate your support. Please like the video, hit the alert, subscribe, help us grow the channel, send the link to your friends, and we'll talk to you all next week. And we think it's going to be a very, very exciting week. Great job, Barry, and we'll talk to you next week.
Thanks, Ben. Good job. And we'll see you guys next week. Take care.
All right.
Bye
Bye-bye.
bye.